Welcome to Talk Tickers. Today, we're going to do a deep dive into Markle Group's Q4 2024 earnings call.
All right.
Now, you might be thinking, insurance? That doesn't sound very exciting. But trust me, Markle's a fascinating company.
Oh, yeah?
With a lot more going on than just insurance. They've got their hands in investments, ventures, and yes, insurance.
Yeah.
But done in a very unique way.
That's right.
Yeah.
Markle Group is known for their long-term approach and this, win-win-win philosophy where they aim to benefit customers, employees, and, of course, shareholders like you.
Gotcha.
Today's earnings call gives us a glimpse into how this is all playing out.
Okay. So paint the picture for us.
Yeah.
Did Markle have a good year?
Overall, definitely. They actually exceeded their return targets.
Wow.
With their public equity portfolio performing really well and their ventures segment showing solid growth.
Okay.
But like any company,
Right.
there are areas they're working on.
Correct.
Specifically, their insurance business is still lagging behind a bit.
Interesting. So let's break this down, starting with how Markle is measuring success.
Okay.
They've introduced this simplified way to calculate intrinsic value using a multiple of 12 times operating income.
Right.
For those unfamiliar with this concept, can you explain what intrinsic value is
Yeah.
and why Markle is focusing on it?
Intrinsic value is essentially what the company believes it's truly worth
Okay.
based on its assets, earnings potential, and long-term prospects. It's an attempt to look beyond the fluctuations of the stock market and focus on the underlying value of the business
Yeah.
by using a multiple of 12 times operating income.
Right.
Markle is providing a clear and consistent way to track this intrinsic value over time.
Okay.
And over the last 5 years, their intrinsic value has grown at a rate of 18.3% annually, which is pretty impressive.
18.3%.
Yeah.
Wow, that definitely sounds impressive. But how does that compare to, say, the S&P 500 or other companies in the insurance industry?
It's significantly higher. The S&P 500, for example, has historically averaged returns closer to 10%.
Yeah.
So Markle's intrinsic value growth is really outpacing the broader market,
Okay.
suggesting they are creating value at a faster rate.
That's a great sign for investors.
Yeah.
Now, let's dive deeper into their insurance segment.
All right.
You mentioned it's underperforming. What's going on there?
Markle acknowledges that there's work to be done,
Sure.
and they are taking action.
Okay.
They've been exiting unprofitable lines of business, making changes to over 100 underwriting policies, and even investing in new technology to improve their processes.
Okay.
They're serious about turning this segment around.
So they're not just sitting back and hoping for the best.
Nope.
What kind of concrete results are they seeing from these actions?
Well, one key metric in the insurance world is the combined ratio.
Huh.
It essentially measures profitability.
Gotcha.
A combined ratio below 100% means the insurer is making an underwriting profit. And Markle saw a 3.5-point improvement in their combined ratio this year,
Okay.
which is a step in the right direction.
Okay. So for those of us who don't speak insurance, what does a 3.5-point improvement in combined ratio really mean?
It means their underwriting is becoming more profitable.
Okay.
Think of it this way.
All right.
For every dollar they take in premiums, they're paying out less in claims and expenses.
Right.
This improvement is partially driven by their efforts to adjust pricing, tighten underwriting standards,
All right.
and exit those unprofitable lines of business we talked about.
Got it. It sounds like they're making some positive changes. But before we get too deep into insurance, let's shift gears and talk about their ventures segment.
Sure.
This is where Markle invests in a diverse range of businesses, right?
Exactly. Markle Ventures operates independently from the insurance business and reached a significant milestone this year, crossing $5 billion in revenue for the first time ever.
That's a huge accomplishment.
Yeah.
What's driving that growth?
Their consumer and building product businesses are doing particularly well.
Okay.
Think of things like home building materials and consumer goods. These sectors have seen strong demand recently, and Markle Ventures is capitalizing on that trend.
It sounds like they've got a good mix of businesses. Are there any areas within ventures that are lagging behind?
While consumer and building products are booming, their transportation and construction services segments saw slower growth.
Okay.
However, Markle believes these are cyclical industries, meaning they tend to go up and down with the overall economy.
Right.
Their long-term approach is to ride out these cycles and focus on building strong,
Gotcha.
well-managed businesses that can weather any storm.
That makes sense. Now, onto their investments. They had a pretty stellar year in their public equity portfolio, right?
Absolutely. Their public equity portfolio earned a remarkable 20.1% return in 2024.
Wow.
Significantly outperforming the market.
Okay.
But here's the thing. They're not getting ahead of themselves. They're not banking on repeating this exact level of performance in the next 5 years.
So they're staying grounded. What's their overall investment philosophy?
They're value investors at heart.
Okay.
They look for companies that they believe are undervalued by the market,
Gotcha.
focusing on long-term potential rather than short-term gains.
Okay.
And this disciplined approach seems to be paying off.
Speaking of value, did they mention anything about buying back their own shares, that move companies make when they believe their stock is undervalued?
They did. Markle has been steadily buying back shares.
Okay.
In fact, over the last 3 years, they've repurchased a significant chunk of their outstanding stock.
Mm-hmm.
And they just authorized another $2 billion for share repurchases in 2024,
Oh.
which is a pretty strong signal that they believe the market isn't fully recognizing their intrinsic value.
It would definitely suggest they see an opportunity there.
Yeah.
So they've got this diversified business model,
Right.
strong investment performance,
Right.
and they're actively buying back shares.
Mhm.
What's next for Markle? What's their vision for the future?
They're emphasizing transparency and communication with shareholders, which is always a good sign.
Okay.
They've actually announced a board-led review
Right.
to explore ways to streamline their structure,
Mm-hmm.
optimize capital allocation,
Okay.
and enhance their disclosures.
That's interesting. What's the thinking behind this review? Are they trying to shake things up?
It seems like they're being proactive.
Yeah.
They want to make sure they're operating as efficiently as possible
Mm-hmm.
and that they're providing investors with all the information they need to understand the business.
Right.
This review could lead to some interesting changes down the line.
It definitely sounds like Markle's not standing still.
Yeah.
They're actively looking for ways to improve and create value.
Yeah.
Before we move on, is there anything else from the earnings call that really jumped out at you?
You know, what stood out to me the most is this combination of their long-term focus, their diversified business model, and their willingness to adapt and evolve.
Yeah.
They're not afraid to admit where they need to improve,
Right.
and they're taking concrete steps to address those challenges.
Mhm.
That's something I always look for as an investor.
I agree. It's a sign of a strong management team that's committed to creating value over the long haul.
Okay.
Okay, before we jump into our This Is Not Financial Advice segment, where we throw out a wild but plausible trade idea based on what we've learned.
All right.
Let's take a quick recap of what we covered so far.
Markle exceeded their return targets for the year.
Okay.
Their ventures segment hit a record $5 billion in revenue.
Right.
And their public equity portfolio had a stellar performance.
We also talked about how their insurance segment is underperforming,
Yes,
but they're taking steps to improve profitability and turn things around.
that's right.
And finally, we discussed their commitment to transparency and their announcement of a board-led review,
Yeah.
which could lead to some exciting changes in the future. All right, let's have some fun. It's time for This Is Not Financial Advice.
All right, here's where we get a little speculative.
Okay.
What if Markle decided to spin off their ventures segment as a separate, publicly traded company?
Hold on, spin off the venture segment.
Yeah.
That's a pretty big move. Why would they do that?
Think about it.
Okay.
Right now, ventures is kind of tucked away within the larger Markle Group structure.
Right.
Investors may not be giving it the attention or valuation it deserves.
Okay.
By spinning it off, Markle could unlock that hidden value and potentially attract a whole new set of investors who are specifically interested in those high-growth businesses.
That's an interesting point. They'd be essentially creating two distinct investment opportunities,
Right.
each with its own story to tell.
Exactly. And it could benefit both entities.
Brooke?
Markle Group could focus on strengthening its insurance business and streamlining its operations,
Right.
while Markle Ventures would have the freedom to pursue its own growth strategy and attract investors who are specifically aligned with its business model.
It's a bold idea, but it's not entirely out of the realm of possibility. They've already shown a willingness to make big changes to optimize their business.
That's right.
And remember, this is just a thought experiment, not financial advice.
Of course.
But it's a scenario worth considering as we continue to follow Markle's journey.
Absolutely.
It definitely makes you think, okay, let's get back to Markle's overall performance. They've achieved this impressive intrinsic value growth,
right.
but their stock price hasn't quite kept pace.
Yeah.
Why do you think there's a disconnect there?
There are a few possible explanations. First, The underperformance in their insurance segment has probably made some investors hesitant.
Okay.
Even though they're taking steps to address it.
Right.
Some investors might be waiting to see more concrete evidence of a turnaround before they jump in.
It makes sense.
Mm-hmm.
People want to see results. What else might be contributing to this gap between intrinsic value and stock price?
Their diversified business model.
Okay.
While a strength in the long run
Yeah.
can make it harder for some investors to assess their true value.
Cool.
They're not as easy to categorize or compare to other companies, and some investors might prefer simpler, more focused businesses.
It's almost like they're being penalized for being too interesting.
In a way, yes. And then there's the factor of their long-term focus.
Okay.
Their commitment to intrinsic value and steady growth may not always resonate with investors who are looking for quick returns.
It's the classic tortoise and the hare scenario. Slow and steady wins the race. But some people are just fixated on the hare. Now, let's circle back to that spin-off idea for a moment.
Okay.
What are some of the potential benefits you see for Markle Ventures itself if they were to become a separate entity?
I think a spin-off could really increase their visibility.
Okay.
Right now, they're somewhat hidden within the larger Markle group.
Right.
But as a standalone company, they could tell their own story and attract a whole new set of investors who are specifically interested in those high-growth sectors they're in.
So they could really step out of the shadows and shine on their own.
Exactly. And a spin-off would give them more flexibility in terms of capital allocation and strategic decision-making.
Okay.
They could pursue acquisitions and growth opportunities that are specifically tailored to their own objectives without having to consider the broader implications for the entire Markle group.
It's like giving them the keys to their own car and letting them choose their own destination.
That's a great analogy. And of course, there's the potential for a higher valuation.
Okay.
Investors might be more willing to assign a premium to a pure-play ventures company, especially one with Markle Ventures' track record of growth and profitability.
It's certainly a compelling argument. But let's not forget the potential challenges.
Right.
What are some of the downsides they would need to consider?
Well, a spinoff is a complex process.
Okay.
It requires a lot of careful planning and execution to ensure a smooth transition.
Right. There's always a risk that the market might not embrace the newly independent company as enthusiastically as anticipated.
So they could face some bumps in the road along the way.
Yes, and they would need to be prepared for that.
Yeah.
There's also the potential for losing some of the synergies that exist between Markle Group and Markle Ventures.
Okay.
Right now, they benefit from shared resources, expertise, and a strong corporate culture.
It's like untangling two threads that have been woven together.
Yeah.
It could be tricky.
It would definitely require careful consideration and a strong strategy to mitigate those potential downsides. And remember, we are speculating here.
Right.
Markle hasn't given any indication that they're considering a spinoff.
Right.
It's just an interesting thought experiment.
It definitely is. It really gets you thinking about the different ways a company can evolve and create value. Now, before we wrap up our deep dive into Markle, I want to revisit their win-win-win philosophy.
Sure.
How does this actually translate into real-world results for investors like you and me? It's more than just a slogan. This philosophy is embedded in everything they do.
Okay.
Their commitment to customer satisfaction helps them build long-term relationships and loyalty, which translates into stable and predictable revenue streams.
So happy customers lead to happy shareholders.
Exactly.
That's a win-win I can get behind.
And their focus on employee well-being fosters a positive and productive work environment, which can lead to innovation and efficiency. This ultimately benefits shareholders through improved profitability and growth.
It makes sense. When employees feel valued and supported, they're more likely to go the extra mile.
And then there's the financial side of things. Their disciplined approach to underwriting, investing, and capital allocation is all geared towards generating strong returns for shareholders over the long term.
So it's not just about warm and fuzzy feelings.
Right.
There's a real financial impact.
Absolutely. And remember, they're not just focused on short-term profits. Their emphasis on intrinsic value means they're building a sustainable business that can generate returns for years to come.
That's the kind of long-term vision I look for in a company. So like they're building a ship that's designed to weather any storm.
That's a great way to put it. Their commitment to this win-win-win philosophy isn't just a nice idea.
Yeah.
It's a core part of their business strategy that ultimately benefits everyone involved, including shareholders.
Now, before we move on to our final segment, I I want to ask you this.
All right.
Do you think Markle's unique approach makes them a potential safe haven for investors in a volatile market? Or is it a contrarian bet that requires a leap of faith?
That's a really interesting question. And there's no easy answer. I think it depends on your individual investment goals and risk tolerance.
Right. There's no one-size-fits-all answer in investing.
Exactly. But what I can say is this. Markle is a company that is willing to think differently and do things their own way. They're not afraid to go against the grain.
Right.
And in a world where so many companies are chasing short-term trends, that can be a very valuable quality.
It's definitely something to consider.
Yeah.
All right, let's wrap up our deep dive into Markle Group with a final thought-provoking question for our listeners to ponder. Are you ready for this?
I believe so. Hit me with it.
Here's the question we'll leave you with. Does Markle's win-win-win philosophy truly position them for long-term success in a market that often prioritizes short-term gains? Or is their unique approach simply too unconventional for today's investors?
It's a fascinating question and one that only time will truly answer.
Yeah.
But I think it highlights the importance of understanding a company's philosophy and how it drives their decision-making.
I agree. It's easy to get caught up in the numbers, but ultimately, investing is about betting on people and their vision for the future.
Exactly. And with Markle, you're betting on a management team that's committed to building a sustainable business, fostering a positive work environment,
and generating long-term value for shareholders.
It's a compelling story. And while there are always risks in investing, Markle's track record and their commitment to their principles make them a company worth watching closely.
Absolutely. Well, that wraps up our deep dive into Markle Group's Q4 2024 earnings call.
Yeah.
We've covered a lot of ground today, from their financial performance and strategic decisions to their unique win-win-win philosophy.
We also explored that intriguing, albeit hypothetical, spin-off idea for their ventures segment. It'll be interesting to see what moves Markle makes in the future.
As always, remember that this is not financial advice. Do your own research. Consider your own investment goals and risk tolerance, and consult with a financial professional if needed.
And most importantly, stay curious, keep learning, and never be afraid to ask questions.
Until next time, happy investing.